Hi everybody, it's FIBO Group, and you are watching to the Market Watch review. Markets in Asia Pacific fell overnight Monday, as traders failed to see past the recession fears. Meanwhile, Chinese officials pledged to stabilize China's economy by 2023. Mid-morning, the Stoxx 600 was up 0.7%. All major sectors and major bourses traded in positive territory. After Wall Street's second consecutive week of losses, U.S. stock options edged fractionally higher in premarket trade. The U.S. dollar index dropped by 0.2%. The Australian dollar is the strongest. The gold price is up by 0.33%, while the WTI oil gained 2.4%. Asian Pacific market. Chinese officials pledged to stabilize the economy by 2023 and to maintain sufficient liquidity on financial markets to achieve key goals. On Tuesday, the People's Bank of China will set rates for its 5-year and 1-year loan prime rates. Sources said that Japan will review its 10-year-old plan to combat deflation next year. Financial markets are betting that a weaker yen and rising prices will force the central banks to abandon its loose monetary policy. The greenback is currently at the 135.75 level, which is against the Japanese yen. The resistance at 0.6735 was the lowest point for the Aussie. Market of Europe. On Thursday, the European Central Bank raised its key interest rate by 1.5% to 2.2% and stated that it would aim to reduce its balance sheet by approximately 15 billion euros each month starting in March 2023 through the end of the second trimester. According to the ECB, rate increases will need to continue at a steady pace. The Bank of England, the Swiss National Bank, and the Bank of England struck similar tones. They also chose 50 basis points increases, matching the U.S. Federal Reserve decision of Wednesday. The resistance zone between 1.073 and $1.074 marked was lower than the single European currency. Sterling has been pulled lower from both the upper end and resistance border of the local range. Market of America. U.S. stock futures rose on Monday after 2 consecutive weeks of losses. Tesla shares rose after Elon Musk's poll asking whether he should resign as CEO. Premarket trading saw shares of the electric car manufacturer jump 5.0% after the poll revealed that about 57.5% of the 17.5 million people voted for him to step down from Twitter. After Fed Chair Jerome Powell signaled tighter policy, the S&P 500 and NASDAQ both lost more than 2% last week. The central bank predicted that interest rates would reach 5% in 2023, an unprecedented level since 2007. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.